Welcome to Beacon of Books, where we turn the world's best books once into concise and powerful insights you can learn in just minutes.
In the world of finance, where billions of dollars move every second, and where a single decision can change the fate of a fortune, there exists a special group of traders. They are not ordinary investors. They are often referred to as the wizards of the market. These individuals operate behind the scenes in the world of hedge funds, navigating complex markets with strategies, discipline, and insights that most people never see. But how do these traders think? How did they achieve extraordinary success in some of the most volatile and competitive markets in the world? This is the question that financial author Jack D. Schwager set out to answer in his remarkable book Hedge Fund Market Wizards. Instead of writing a theoretical guide about investing, Schwager decided to go directly to the source. He interviewed some of the most successful hedge fund managers and traders of our time, individuals who consistently delivered exceptional returns over many years. Through these in-depth conversations, he uncovered powerful lessons about risk, psychology, discipline, and independent thinking. And what emerges from these interviews is far more than a collection of trading strategies. It is a story about mindset, perseverance, and the art of decision-making under uncertainty. The beginning of the journey, Jack Schwager began his research with a simple but profound question: why do some traders consistently succeed while most others fail? Is it intelligence? Is it access to better information? Or is it simply luck? To find the answer, Schwager spoke with a diverse group of elite traders managing billions of dollars in hedge funds. What he discovered was surprising. These traders used very different methods. Some relied heavily on quantitative models and sophisticated algorithms. Others focused on macroeconomic analysis, studying global economic trends and political developments. Some were short-term traders who acted quickly on price movements. Others were long-term investors who patiently waited for major opportunities. Yet despite their differences, they all shared certain principles that guided their success. And this leads to the first major lesson of the book. Lesson 1. There is no single formula for success. Many people enter financial markets searching for the perfect strategy, the one system that never fails. But the truth revealed in Hedge Fund Market Wizards is that there is no universal formula for success in trading. Each successful trader developed a method that matched their own personality, strengths, and tolerance for risk. Some traders thrive on fast decisions and rapid market movements. Others prefer slow, analytical strategies based on careful research. What works brilliantly for one trader might be disastrous for another. That is why the best traders do not blindly copy someone else's strategy. Instead, they build a system that aligns with how they think and how they respond to uncertainty. Lesson 2. Protecting capital comes first. When Schwager asked these traders about the secret to their long-term success, many of them emphasized one principle above all others: risk management. Professional traders understand a simple reality. Markets are unpredictable. Even the best analysis can be wrong. Because of this, successful traders focus first on protecting their capital. They carefully control how much they risk on every trade. They define clear limits for potential losses. And when those limits are reached, they exit the trade without hesitation. They understand that staying in the game is more important than chasing short-term profits. As many traders say, if you manage risk well, the profits will follow. Lesson 3. Discipline is more important than intelligence. Many people assume that successful traders must be extraordinarily intelligent. But the interviews in this book reveal a different truth. While intelligence certainly helps, what truly separates the best traders from the rest is discipline. They follow their trading rules with consistency. They do not abandon their strategies during emotional moments. They do not allow fear or greed to dictate their actions. When the market moves against them, they remain calm. When they experience success, they avoid becoming overconfident. Their strength lies not in predicting every market movement, but in maintaining discipline regardless of the outcome. Lesson 4. Independent thinking. Financial markets are heavily influenced by crowd behavior. When prices rise, people rush to buy. When prices fall, panic spreads quickly. But the traders featured in Hedge Fund Market Wizards often think differently from the crowd. They rely on their own research, analysis, and judgment. They are not easily influenced by headlines, rumors, or popular opinions. Sometimes their positions even go against the majority of the market. Yet it is precisely this independence that allows them to identify opportunities that others fail to see. In markets, following the crowd rarely leads to extraordinary results. Independent thinking is often the key. Lesson 5. Learning from mistakes. One of the most powerful insights in the book is that nearly every great trader experienced significant setbacks. Some lost large amounts of money early in their careers. Others made major mistakes that forced them to rethink their entire approach. But what truly distinguished them was how they responded. Instead of ignoring their failures, they studied them carefully. They analyzed every losing trade. They asked themselves difficult questions about what went wrong. Through this process, they gradually refined their strategies and strengthened their decision-making abilities. Failure, for them, was not an endpoint. It was part of the learning process. Lesson 6. Extraordinary patience. Markets move constantly, and opportunities seem to appear every day. But experienced traders know that most of these opportunities are illusions. The best trades, the ones with the highest probability of success, are relatively rare. That is why patience is one of the most valuable qualities a trader can possess. Many successful hedge fund managers are willing to wait days, weeks, or even months for the right opportunity. They avoid unnecessary trades and focus only on situations where the odds are clearly in their favor. Like skilled hunters, they understand that patience often leads to the greatest rewards. Lesson 7. Trading is a psychological challenge. Perhaps the most profound lesson in the book is that financial markets are not just analytical environments. They are also psychological battlefields. Fear, greed, doubt, and overconfidence constantly influence decision-making. Even experienced professionals must learn how to manage these emotions. Successful traders develop strong psychological resilience. They remain calm during periods of loss. They avoid arrogance during periods of success. And they maintain a balanced mindset regardless of market conditions. In many ways, mastering trading means mastering yourself. Stories from the world of hedge funds. What makes Hedge Fund Market Wizards especially fascinating are the personal stories behind each trader. Some began with very little capital. Others came from completely unrelated professions before discovering their talent for trading. Their journeys were not easy. They faced setbacks, losses, and moments of doubt. Yet through persistence, discipline, and continuous learning, they eventually achieved extraordinary success. These stories demonstrate that success in trading is rarely the result of luck. It is the result of dedication, resilience, and a commitment to constant improvement. Final thoughts. After interviewing some of the world's most successful hedge fund traders, Jack Schwager reached a powerful conclusion. Success in financial markets is not simply about predicting price movements. It is about developing the right mindset. The best traders protect their capital, control their emotions, learn from their mistakes, think independently, and remain patient while waiting for the right opportunities. Ultimately, the market becomes more than just a place to make money. It becomes a reflection of discipline, psychology, and decision-making under pressure. And perhaps that is the greatest lesson of Hedge Fund Market Wizards. It does not only teach us how to become better traders. It teaches us how to become better thinkers in a world filled with uncertainty.
This was a summary of today's book from the Beacon of Books channel. If you liked the video, don't forget to like the video and subscribe to the channel to receive all the new content.